Dung Duc Hiếu, IR managers. The Q&A sessions will follow, and I believe that investors have received a QR code to submit questions in advance in our invitation letters. Now, let me introduce Mr. Đỗ Việt Hùng.
Good morning, ladies and gentlemen. My name is Hùng Đỗ. I'm the member of the board of directors of Vietcombank. So on behalf of Vietcombank's board of directors and the executive management, I would like to welcome all investors, shareholders, analysts to our briefing on Vietcombank business performance for the fourth quarter and the full year of 2025. First and foremost, thank you for the continued interest in Vietcombank and for the trust you have placed in our long-term strategy. The support and constructive engagement are important to us as we continue to strengthen Vietcombank's position as the Vietnam leading bank. At Vietcombank, we remain firmly committed to transparency, timely disclosure, and the protection of shareholders' rights. Today's session reflects our ongoing efforts to provide the market with clear, consistent, and comprehensive information, as well as an open platform for dialogue with our stakeholders. In 2025, despite global uncertainty, Vietnam maintained strong momentum, with GDP growth reaching 8.02% for the full year. FDI continued to be a key driver, reflecting sustained confidence from international investors in Vietnam fundamentals and long-term outlook, with registered FDI exceeding $38 billion, while disbursed FDI reached around $27.6 billion. Credit demand also strengthens, with system-wide credit growth reaching nearly 18%, supporting economic activity and business expansion. Against this backdrop, Vietcombank delivered another year of solid and disciplined performance in 2025. For the full year, profit before tax reached 44.02 trillion Vietnamese dong, underpinned by resilient core banking income and prudent balance sheet management. Both credit growth and customer deposit growth increased during the year, reaching 15.3% and 10.5% respectively, providing a strong foundation for business momentum. On the other hand, asset quality remained among the strongest in the system, with the NPL ratio at 0.97%, while our provision buffer stayed robust, with a loan loss coverage ratio of 154% and improved capital strength, with CAR ratio at 11.7%, reinforcing our capacity to support sustainable growth and resilience going into 2026. To provide deeper insights into the macroeconomic environment and our performance, colleagues from Vietcombank Research and Investor Relations teams will walk you through the presentation. We will then open the floor for question and discussion with our esteemed shareholders and investors. With that, I would like to hand it over to Mr. Nguyễn Thắng, Chief Economist, to share our views on macroeconomic performance. Thank you. Mr. Thắng, please.
Okay, thank you very much, Mr. Đỗ Việt Hùng. Yes, I think that you already know that in 2025, the State Bank of Vietnam actually loosened monetary policy and credit grew at approximately 90%. But this year, in 2026, the State Bank of Vietnam actually took a more cautious approach to the lending to the credit, management. Actually, it's the set limit, the ceiling to just 50%. So that's much lower than last year, 19%. And this reflected the more cautious approach of State Bank of Vietnam, given the fact that credit per GDP in Vietnam almost reached 150%, which is very high by international standards. That justify the new approach of the State Bank of Vietnam to credit limit. And State Bank of Vietnam recently also announced a number of requirements of this. So first one is that for the first 3 months of this year, that is in the first quarter, credit should not grow in excess of 25%, a full year credit growth limit quota, in order to avoid early overheating in the lending. Importantly, the State Bank of Vietnam requires that growth rate of outstanding real estate loans must not exceed the bank overall credit growth compared to the end of 2025. So this reflects, I mentioned earlier, this more cautious and prudent approaches State Bank of Vietnam in order to contain credit to high-risk sectors. And we hope that this year the real estate market will cool down a bit. Thank you.
Thanks, Mr. Tang, for the macro update. Now let's discuss the firm performance in the fourth quarters of 2025, which is another solid quarters for the firm. Starting with our loan book, which is a key item in our balance sheet and made up around 83% of our interest income. In Q4, loan growth continued its momentum from Q2 with strong recovery from most segments. The firm ended the year with loan of 1,674 trillion, up 15.5% year to date, slightly higher than growth of 2024 of 14.1%, and in line with the market recovery. The loan growth was driven by corporate segment, particularly with disbursement from medium and long-term projects, while retail segment gained momentum during the second half. If we include loans transferred to our BCB Neo, actually credit growth were well above sector's average. Going deeper into our loan mix, corporate loans accounting for 49% of the loan book, it was driven by all 3 customer segmentations. FDI loans recorded above average growth of 17%, focusing on sectors such as electronic products, animal raisings, and textiles. Large corporation segments saw continued disbursement from major projects, while mid-sized corporation loan posted growth of 20% year to date, confirming economy's bounce. Individual loans accounting for 45% of the total loan was up 18%